Hi Luca. I just got back from the beach. I did a really hard workout, and I'm hoping that that's gonna make me fall asleep. If I can fall asleep before 7 p.m., that'll be great because then I can sleep 4 or 5 hours, um, and wake up for the Open. Haven't decided if I'm gonna do that yet, but like, that's sort of the plan. Um, so on with the second video. So this is more. Um, This is more specific to how to manage the account because now I'm thinking that way because I'm resetting it and I'm now, pretty much back on like game on, right? So it's about passing that evaluation. So, before I guess I was like, um, I guess not in serious mode or like in practice mode because even though I was, I don't know, and I was just drilling myself into a hole and so by resetting it, I'm putting myself because now I'm again $3,000 away from from a stop out, right? So um, it's like putting myself back with my back against the wall and trading it in a way that that not only that I can pass, but to begin, I have to start by not blowing it up. So the idea here is the following. And this is what I'd like you to understand. Well, we kind of discussed this already, the difference between that evaluation that you're doing and trading a live account. And I think the main difference is that one, that you have that daily cap, right? So that's also one of the mistakes I was making. I was trading as if I were trading my live account. And so those trades on silver, it was like I was going big because that's how you have to trade those trades. And kind of like disregarding the 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 specific situation with that account. It was not a live account. So so I was, trading it, I guess, to satisfy my ego because uh, as we discussed already, it won't matter if I make 10x or 20x on that trade because there's a daily cap. So um, Um, so here's what I think is the plan. And the plan is if you're starting from zero, um, the same way we were talking about pyramiding a daily P&L, you also need a pyramid, basically the account. So those first, when you're at zero, you don't want to go into negative. And if you do, you want to go into negative very small. So it doesn't matter what the opportunities are. Like we said, you can't really maximize P&L on an A triple plus setup anyways. So size needs to be half or even less than that, maybe 30% of what the size can be later on. And once you stack up, in my case, so I have a $3,000 stop, and once I stack up 3,000 positive, like if then I can add size. Because I'm away, and now I'm pretty much, I'm sort of like risk free and not risk free, but I don't have the risk of a blow up or risk of going negative with the account and so forth. So I think that's the way to approach it. And that differs by instrument because every instrument has a different tick size, a different tick value. So for example, in oil, this last trade that I was doing here, I was when I was entering here, I was entering with 4 lots, and the 4 lots were 5 contracts each, so 20 contracts in total. And when it went against me, I had an entry at 558.21, and I ended up getting out at 58 point, I think 17 or 16. So 4 or 5 points below. I was supposed to get out um, if it dropped below 20, but I didn't because I'm an idiot. Uh, but anyways, and that meant I was like $250 down. So so that, for example, would be unacceptable if you are literally starting. If you have a max loss of 1,200 for the day, it's like no way. There's no. It's a paper cut. You can't. A paper cut can't be um, 25% of your daily stuff. So the idea here is um, to start off with um, a fifth of that size. So I'm going to bring my lots down literally to one contract, and I'll still put on 3, 4 lots because the way I trade, I need to be able to scale out, and before it breaks out, I like to basically scalp around a core to build a core. So it can't be just one entry. So I'll trade for 2 or 3 lots, but or 3 or 4 lots, but then I'll bring it down to a fifth of the size. So it'll be one contract per lot. And that means that on a trade like this, I could take a paper cut. Instead of being $250, it'll be $50, and that's more reasonable. Um, in any event, that's the adjustment that I'm going to be doing um, with oil, and then the same math applies, but on a different scale to NQ and to whatever, just depending on the tick value of each of these instruments. And I haven't done it. I have to. Maybe I'll do it in a little while, where I'll basically list all the tick values and tick size of each of all these instruments, and then just come up with a hard number that I can, and then program that into my my hotkeys when I choose the orders, the size that I'm gonna trade with. So anyways, that is one thing that I wanted to get ahead. It's like the notion of pyramiding not just the daily P&L, but actually starting actually managing the account from the very beginning like that, and then step it up after you're, let's say 25 to 30% on your way, positive equity on your way to target, right? So that's the first thought that I wanted to bring up. But then the second thought is that when we were talking about risk management yesterday, we didn't really tie it into setups, and that's and you can't really think about managing risk if you're not talking about specific setups, because your risk is going to be different for different setups. um, I'll give you an example of um, uh, let's say a setup or a strategy. At SMB, when I was there, um, there were guys that would create an account just for a specific setup or a strategy. So, for example, if they were trading on market on close, like market on close imbalances or something like that, they would have a special account just for that. That account is not something that you'd go and scalp or trade this or trade that. No, there's nothing of that. Account is only for that particular strategy, and that, um, um, you know, um, that helps them. And you don't need to do that because you can do that on TradingView, Trader View. But it still helps you differentiate like that account, whatever P&L performance that account has, what to attribute it to. It's attributable to that specific strategy and that specific setup. And so my recommendation, if you're doing an evaluation, is that you don't treat that account like your regular trading. Go do it in a practice account until you pass that evaluation. But that evaluation account, you should have strict rules as to what setup you can trade with it. And that's it. and you don't trade anything else but that particular setup. It doesn't have to be exactly one. And also, this is the important part. It has to be flexible because um, it needs to be adjusted to market conditions. So the breakout setups that we were discussing, that I was telling you how I look at them and all that, those haven't been working for the past week. And that would have meant that for the past week, you just don't take any trade at all because those weren't working. But then, so you can be a little bit flexible and you can have two or three setups um, that cover different market conditions. But the account should only, like you could be doing your own trading on a practice account or a personal account or a different account, or you're trading those CFDs, or you can do that, and you can be doing that. And then when the setup shows up, that's when you switch over to the account, and that's the only way you can really um, um, keep track of performance, because you're being reductive and bringing it and narrowing it down to a very specific strategy or setup. So yeah, the SMBs, a lot of people did like that. They had like an account for swing trades. They would never swing on the regular account, but then every time they had like an overnight, one of those overnight swings, they would do it on a different account. And sometimes they had several traders trade one account. They would share that account. So, anyways, um, what am I saying that? Because that way you're gonna eliminate variance. Um, and you're gonna anytime you're taking a trade, you're gonna maximize, because that setup is obviously gonna be, you're gonna choose a setup that's gonna be high risk reward. You're gonna choose a setup that's gonna have high EV, that's gonna have low risk. That's basically, you're just gonna try to limit yourself to layup trades, and so that's gonna eliminate variance in the P&L. It's going to eliminate, you're going to have losses obviously, but there'll be paper cuts. And when you hit when the trade works, you already know that you're going to recover all the paper cuts and double it or triple it, because the setup is going to have, inherently, it needs to have a good risk reward. So, and that's where we're going to go here. And I'm going to use the same trade because we're already familiar with this trade. We were discussing it, and because it's current, it's happening. And this is the trade in oil. And we go back to the same thing, right? What makes this trade, what makes this setup an A plus setup, aside from the because there's a news catalyst, there's a market, there's something happening, right? There's the Iran situation, it's escalating. It was already escalating 2 days ago. This is when this thing turned here. But purely from the technical perspective, why was it also an A plus? Well, we go back to the same principle that we were talking about, which is um, where is volume trapped, right? And um, on a higher time frame. And in this case, this would mean we have a range here. So after this breakout here, it kind of made its way up here. It topped out here in the 50, up, between 58.50s and 58.80s. It never even touched 59, I think. And then bam, hard sell off, comes back up, retests again, or gets pretty close to it here, the 58.50s, fails, goes back up, same area, 58.50s, fails, and then a steep downtrend, finds a bottom, goes back up, tests 58.50s, gets it looks like it's rolling over, they save it, pops back up, gets pretty close to 59, but doesn't quite get it. But tests these highs here, fails again, steep sell-off, coming back here. So we know that this is the top of the range, and we know that it's very hard resistance there. Um, and every time it gets up there, it's basically double topping. Well, at this point, it's already a triple top, I guess. But it's um, And after this hard setup, then same thing again. But what the difference here is that here we have the fundamentals are changing in terms of market sentiment, in terms of the escalation with the Iran thing and the tankers and all that. So, um, um, so we get here on a more on a lower time frame, we get the that this thing was trending down, break of trend that coincides with again that fundamental catalyst. Um, and then at many points signs of strength. So the first sign of strength was like the 5650s was this level that was we were hoping it was going to test. This is a pretty you don't need a fundamental catalyst or anything. This is a pretty just a technical little trade where you know that it's okay. It's getting near to that to the top. This is going to be a double top. It's breaking here. The 58 whatever. This was like an important level. The 30 again 5630 and then we're going to get that little pop into the mid 56s, and that's a good trade. Okay, but the expectation is that this was actually was going to just double top the way it's been double topping all the time, but it didn't. It trapped, and then it kept squeezing up higher. The next um, area was 57. Tested 50, rejects here just below 57, the 5690s, rejects again, traps, bam, pops hard, and after that, it's the same expectation. Okay, we see a pretty big double top here. This is supposed to be dying, but it didn't die. It got saved here, which is also a trap because there's a ton of people hitting it short here. There's a lot of trapped, short volume trapped here. It traps it, and that's what fuels this huge move to the upside. So, and then we move to a higher time frame, and it's the same thing. We're expecting this thing is already, in the high 58s, very close to 59. It's going to double top here, just the same way it's been double topping all this time. And there are a lot of people that were probably purely technical traders. I guess mostly, not just mostly retail. Even the guy from Maxit I was training with, he would have been shorting this shit. Um, when he's trading purely from the technicals because it's a double top and look how extended it is. So it was and actually it was working out like that and it makes lower highs here and look at this flush here. But what happens? The flush is saved, back up, reclaims that volume point of control here in the 5820s. This is the trade that I was trying to capture here. And again, volume trapped on a low time frame, very local pattern here, but also on higher time frames. On the highest time frame of all, this thing is supposed to be rejecting here off the top of the range. And it looks like it's trapping volume, and it's gonna gap up and at least test that top of the range. In this case, it ends up breaking above it. On a higher time frame, we already talked about it. This is already breaking through that anchored VWAP that I've had it anchored for a few weeks. So, and again, the main thing is that this is all happening, and we know it's happening while there's a strong catalyst that's pushing up higher. So this was sort of expected. Now, when there is edge, or when there is whether it's market sentiment, whether it's either an acute news or what's going on in this case. Sometimes it's just a strong technical on a higher time frame, a strong technical catalyst that is bringing volume into whatever. So the point is that when you have something that is in the A plus category because all these variables are stacking up, um, um, that setup is what's the risk reward on that setup? If you're getting in here in the low, I mean, the entry was actually here off of 58, but even if you're getting here 58 to 58.20s, And let's say that you have a target here of 59, which is the target that I had. Um, if you're getting in at 58 and you're risking 4 points, which is what I was risking, or maximum 5 points, and you're getting 100 points in pure momentum. This didn't pull back. This is all pure, all green candles. You see some red candles. This is the 5-second chart. If it's a 1-minute chart, it's all green candles, nonstop until it hits 59. So that's a 1 in 20 risk reward. So yeah, in trading a live account, this is a huge trade. And if you're trading with size, this makes your week or your month or whatever. But in the case of trading an eval account, this is not that for you because you have a cap on profits on your day, but it is an opportunity to take a trade that is very low risk. Once it gets going, it has a huge risk reward, which means that you can trade it with small size. And you can still even trade it with small size and even risking very little, you can still hit that daily target very easily. And it's not like one of those trades that you like to take where you hold for an hour or whatever, 20 minutes for that stuff. No, this is real momentum. This was the breakout. And let's go back to the 1 minute. This was, you know, I guess between 9:07 and it tops out 9:19. So this is in 10 minutes. It already bam, it already hit target a full point higher. So if you identify a setup like this, it's an opportunity, and and these setups happen like this when there's a strong fundamental catalyst behind it, and it's an opportunity for you to hit the target, that daily target that you have, um, with with small size, risking very little, and in a fell swoop, right? In one trade, and you're done. And that eliminates the uncertainty of whether you're going to be trading well or not when the market opens, and then the losses and the wins. But it's a layup trade. It's not even, it doesn't even feel like regular trading. It feels like cheating. It feels like well, like when you're playing a video game and then you get like I'm not a gamer, but you get like bonus shield, whatever. So for the next 10 minutes, you're invincible, or immune to attacks, or whatever it is, something like that. You know, that's what it means. So the value of this, if you're trading an eval account, is immense because it eliminates the risk, and it kind of like you get level up immediately. So the smart way of approaching that eval account is to have it exclusively for layup trades like this. And what does that mean? It means that this past week you probably wouldn't have placed a trade at all because the market sucked. There was nothing happening. It was all, noise and chop and that like stupid grinds that, and I mean it fucking killed me, right? And killed everybody. That's frustrating, but this is different now. All of a sudden, Europe announcing sanctions on tech companies in the U.S. Tomorrow it's gonna. I mean, at the open, it's gonna be limit down, not limit down, but it's gonna be. I mean, the equities are gonna flush, gold is gonna pop, silver is gonna pop, and then with Iran situation escalating, this thing is gonna go haywire. So now everything changed. Things were different last week. Now we're in a situation where all markets are going to be correlated and there's going to be clear directional moves. The style that we were practicing, that we were discussing over a week ago, that comes back into play. And then these breakout setups after the breakout, joining momentum, whatever it is. In this case, for example, it's already this breakout happened here. It's pulling back. We have a trend line here, breaks that trend line here, recovers this, um, reclaims this VPOC. And when we get that first exhaustion candle, if it traps after that exhaustion candle, because we are in the environment we are and we have that strong fundamental catalyst behind it, it's an 80%, 90% probability trade. And 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 that's all you need. And these things have, the important thing is that if it were a live account, you were trading it, you would be putting as much size as you can. In this case, again, because of strategy, because it's an eval account, that's not the point, but it's still, you put on your small size, but these trades have range and they're pure momentum and they cover that range. So the next target here is going to be here, this 60, obviously. We're here, we're literally curling here and ready to break through this trend line and the 59 level that we already reclaimed it at the open here. We got pretty close to 15 to 56. We got up to the 59.80s up here, 59.70s. After the new developments here over the weekend, this thing is gonna, 60 is the first target, and I'm pretty sure it's gonna go further up 60. So that's a full point, a full 100 points, a full dollar, I guess, pretty much. And it's gonna happen super. I guarantee you, I fucking guarantee you, it's gonna happen super fast. In fact, when we open here, the gap might even, just the gap might even be taking out that 60 level tonight. So that's a layup trade. That's a layup trade. You avoid putting on real risk. You avoid all the trading crap. You just hit that layup trade, bam, and that moves a needle one to your favor. And you have to put 12 right in a row to pass it. Okay, that's one, guaranteed. That's the power of these things. And the more you keep it like this regarding that eval account, then the higher chance of passing it and passing it really quick. So um, I'm not going to go again with all that, with that. Um, uh, I'm not, and I don't want to be lecturing you. Obviously, it sounds like I'm lecturing you, but with that uh, preaching like a sense of urgency and all that. But I mean, it is true, man. It's like we're literally, fucking World War III headlines over the past 24 hours, 48 hours. Like, um, if you're a trader, then fucking, these are the days that we live for, basically. It's like um, when Roaring Kitty started tweeting, this happened last year, I guess 2024, when he started tweeting over the weekend again, he resurfaced whatever. This Lance tweeted something, just he literally, what he said, exactly what I'm saying here. He said, stop fucking around. These are the days that we live for, right? And he put on one of his biggest trade in his career, and that. So that's this. You don't want to stay awake, that's fine, because I may not even be staying awake. It depends, I don't know. But there will be plenty of opportunities this week. There's gonna be all correlations again are on. It's gonna be clear directional moves, clear momentum to the downside in equities, clear momentum to the upside in metals and oil. So yeah, this is where you need to stop fucking around and this is the opportunity. This is the opportunity. You don't forego these opportunities to be like, no, I'm just going to trade from this time to this time. This is the time that I like to trade. And no, that's not when these things are happening. You adapt to whatever's happening in the market. You nail the setups that you have to nail. And then if you want to trade the other stuff, then trade it on a simulator and trade on a practice account where it doesn't ruin your P&L. But this is what you have to be trading. full stop, period, full stop. I mean, there's nobody in the right mind will say that I'm not right when it comes to this shit right now. So that's my recommendation. You were talking to me, for example, about this technical setup, whether it takes the previous day's highs or not, whatever works for you. So I'm not trying. That's not a style that I would ever trade. But you need to find your, if that is a high EV setup, and well, then base your account around a setup like that, I guess. But then adapt, because that's just a little technical pattern. That's no the real edge is when all the other variables are stacking up. Well, adapt it to the current to this current market situation. And if that setup shows up, and you know how to trade it well, that may be your layup trade. Um, I know which will be mine. And well, if you have one that you already know how to trade very well, just um, tailor it or adapt it to current market conditions, and understand that you have a few days or maybe a week where you have that little bonus, that little shield this example I just gave you, where um, so everything's going to feel easy. So when you put on your trades, if it's a breakout setup and they're going to work, it's going to feel like wow, I can, things are just happening. So these are the moments where you have to press. In this case, it's not to make tons of P&L because you have that daily cap, but it's to move forward the need to move the needle in the eval account. Because in periods like this past week that we've been trading, where there is no real edge and every instrument is doing its own thing and they're chopping around and it's thin and the algos are controlling everything, well, that's not, then everything becomes 50-50. There's no edge, but the edge is on right now. So um yeah, this wasn't this. I didn't mean this to be like a motivational video or anything, but I guess it kind of turned a little bit into that. But the main thing was that it's whatever risk parameters you're going to be setting or rules you're going to be setting in terms of strategy to pass your eval. I recommend that you attach those rules to a specific setup and exploit that setup as much as you can when the conditions are there. That's I guess that's basically the whole thing. Market conditions change, then we have to change, and then I'll do this in a separate video where that's when I chose to switch to like, okay, scalp consolidation modes and then forget about joining momentum because breakouts may or may not work and so forth. But right now here, it's just like everything is like, it's like, the market conditions are ideal for these breakout setups to play out well. All right, man. So hit me up on Discord if you have any questions or if you have any comments or whatever. And let me know if you're gonna be awake tonight or not. And I guess we'll play it by ear. Okay.